Hello everyone and welcome back to a new video on the channel. In this video, I'm going to be going over realty income and how I will retire from this one stock. But before we get into it, if you could please hit the like button, subscribe down below if you want to, and turn the notifications on. It really does help out the channel and so you don't miss a future video. We're doing multiple videos per week on my stock journey with Dividend stock as well as my ISA account. As you guys know, I do have a £40,000 ISA account. I have maxed it out for the past 2 tax years. As you can see, these are the holdings that I have in my ISA. And I also have my normal stock account with Trading 212. If you want to get some free shares when you sign up to Trading 212, I'll leave a link in the description below. Again, you do get a free share when signing up. So this is my dividend account. These are my dividend holdings in my dividend pie. You can see I've got realty income set at 15% weighted, Broadcom at 12%, Rio Tinto at 12%, BHP at 12, Unilever 10, Altria 10, BCE 10, BP 5, AT&T 5, BAT 3, Coca-Cola 2, Imperial Brands 2, and Intel 2. However, we're going to be going over realty income. Now, as you can see, I currently have £800 in here. This is my highest investment so far in this account. I did just add about 7k or 8,000 sorry into this account the other day, and I'm planning to do a £20,000 deposit over the next week. So if we go over to my realty income, you can see I currently have £800 in here, up about 0.9%, but that's not what we're focusing on. We're focusing on the 4.87 dividend yield. I think they just lowered this. I think it was like 5 point something percent the other day. You can see over the week, they've had a nice rally up 8%. Over the last month, they are up 3%. 3 months, they're down. 1 year, they're down. A maximum, they are up, of course. But they are a REIT, okay? Now, investing in REITs is fantastic, in my opinion, for your holdings. And I think if you have a dividend portfolio or any kind of stock portfolio, I do think that you should hold some REITs in there just because, one, of the passive income, and secondly, you're investing in real estate. Now, my real estate holdings, and I did plan on investing, into real estate. However, my philosophy on that has changed and my plans on that has changed into going into just REITs. Now, look, the difference between investing in physical real estate and investing in a REIT is that, okay, you're investing in physical real estate versus having a stock. Now, I prefer stock because, one, you don't have to deal with property management, you don't have to deal with repairs, you don't have to deal with contractors, tenants, you don't have to deal with contracts on their own. Buying a house and selling a house takes time. It's an illiquid asset. It takes a while to buy and sell a property. There's lots of different things you can go down. Versus buying a REIT, you can buy and sell your properties in quotation marks whenever you like. Because when I invest in realty income, when I invest my £800, £900 into realty income, I now own £900 worth of real estate. So you can invest literally £5 into this stock and you now own, and by the way, I'm from the UK, so I'm talking in pounds. Some of you in the US, again, £5, $5, whatever it is, right? You're essentially investing that amount of money into a property. So I now own £900 worth of property investments. Now, when I invest in that, I now earn 4.87% on a annual basis, pretty much, instantly without having to do anything. With just a click of a button, I can go ahead and buy these shares. I can go ahead and sell these shares whenever I want. Okay, I can literally come out of this right now and take my money and run whenever I'd like. Of course, when the stock market's open. It's currently closed because it's Sunday, the day of recording this video. However, I can go ahead and take out this money whenever I like. So they invest in single unit freestanding commercial properties under long-term net lease agreement with its commercial clients. So they buy, office buildings, they buy gyms and all that different kind of things, which I actually like the gym business model. I like the commercial property side of things. And if I was going to go into property, commercial seems like such a better option because you're dealing with big companies, big tenants and big rent, lease agreements and rental agreements. You're dealing with typically longer terms and it's a lot more money involved. Of course, it takes more money to get involved, but it seems just such a simpler process for me personally because you're dealing with companies instead of individuals, which is just much easier and much better experience. And yeah, it's just an overall simpler experience, right? You're not going to deal with as many missed rent payments in commercial as you would with residential, let's just say that, depending on the area you're in, of course, with the residential stuff, but in general, okay? So that is the reason why I have gone ahead and invested in realty income, is because I can go ahead and play the new Call of Duty, which I have been enjoying recently. I can go ahead and play that game and still make cash on cash returns. I'm getting a 5% rental yield, which is paid out every single month. By the way, this 5% is distributed every month, which is about, just under 0.5% a month there. And I can go ahead and earn money when this stock appreciates. Now, when the real estate market is doing good, the price of realty income will of course increase, and you can see the all-time high here for realty income is about $82. So that's a good $20 increase here. So that's going to be about like a 200 and well, actually to £320 increase from here when it gets back to its all-time high. So this is my long-term retirement plans. I do plan on going very, very heavy, multiple five figures, multiple percentage points of my net worth is going to go into REITs such as realty income. Another one to look into is going to be Digital Realty, which is another REIT here. You can see that they are down a good amount over the last year and 3 months. But these pay 4.88%, and Digital Realty is a real estate investment trust, which is engaged in the business of owning, acquiring, developing, operating data centers. That's another REIT to go into. However, if you just go into Trading 212, whatever broker you're with, go into ETFs, and then if you have a look at REIT, and we can go ahead and see what they've got here. So you've got iShares UK Property, which of course does pay a dividend yield there as well. You've got Apple Hospitality, which could be a good one at 5.65% per year. Invesco Real Estate, S&P, US Select Sector, which is just investing in the REITs aspect of the S&P 500. And there's a bunch here that you can go ahead and have a look and choose from. Okay, there's a load of different REITs here that you can go ahead and take a look at. So yeah, that is my plan with the REITs, and my long-term retirement plan with, you know, sort of REITs and passive income is going to be with things like realty income. So there's my video. There is what I'm looking at planning to doing. That is how I'm going to retire with real estate and REITs. But yeah, thank you guys for watching. You know, if we actually, you know what, before we end off the video, let's pull up a calculator and let's do some maths here. So if I have $100,000 in realty income, okay, and we times that by, what's the dividend yield again? Let's see, 4.87%. Let's say that this also goes on average about 7% a year, which is the average of the of the stock market every single year. Then let's say this appreciates by 13% a year, and we compound that, so that's going to be 13,000 per year. Okay, so you know, you can see how this starts to add up. If you have, let's say, $250,000 in REITs, and you're getting the same sort of percentage return, 13% a year, it should be 32K with $250,000 in real estate. Which is very nice. And again, you can buy and sell whenever you like. If you need, say, 50K out of that in an instant, you can go ahead and buy and sell when the stock market's open and have that in your bank account at the end of the same day. Tell me what real estate, tell me what property you can do that. You can buy and sell a portion of the equity within a day and have that in your bank account. You can't do that in normal real estate. So that's why I like REITs. You may get a lesser yield, but it's so much less hassle, and you can sleep easy at night knowing your money is in this, and you know, it's following the property market, following the rents, and you're going to get a dividend yield increase as well by maybe a couple of percentage a year. So that's my video. Thank you guys for watching. I hope you enjoy. Subscribe if you're new. Let me know down below what you think of REITs, and I'll see you in the next one. Peace.